watching Chairman's Briefing, and I'm Rachel Lee. This episode is made for you with the support of Aurion Resources. Let's get started. 3,000 marks a watershed moment for gold. This breakthrough represents more than just a price point. It's a profound statement about the global economic landscape and a testament to gold's enduring power as a sanctuary for investors who are increasingly navigating treacherous financial waters. Starting from a modest valuation in the aftermath of financial crises to a thundering presence that outpaces traditional market benchmarks, gold has transformed from a passive investment to an active narrator of global economic uncertainty. Strategic accumulators like China's central bank are leading a calculated charge. Gold purchases by central banks have doubled since 2022, reaching over 1,000 tons annually. It's a resounding signal of global financial realignment. Bank of America suggests a potential target of 3,500 contingent on a modest 10% increase in investment demand. As our regular viewers would know, Goldman Sachs has positioned its forecast at 3,100 by year's end. So if you're new to this all and wondering what's propelling this rise, it's because of a perfect storm of geopolitical turbulence, economic stress felt all around the world, and strategic repositioning by major buyers. The price of gold has surged more than 40% since the start of January 2024 and is challenging the US dollar. The World Gold Council's latest research indicates that central banks and ETF investors will drive gold's demand, with economic uncertainty reinforcing gold's position as a risk hedge while simultaneously constraining jewelry demand. The debate concerning the validity of gold versus Bitcoin has lost its novelty over the years. But long-standing gold proponent and market commentator Peter Schiff never hesitates to weigh in when comparisons arise. See his post this week. In our last briefing, we highlighted the US dollar index and the erasure of its post-Trump victory surge. We also riffed on the price weakness in Tesla and how the stock had been cut in half. Elon Musk's political rise once fueled Tesla's stock, but sentiment has turned sour. In the US, safety regulators recalled virtually all Cybertrucks off the road. That's 46,000 vehicles. In Europe, sales are sinking as protests and growing dissatisfaction erode Tesla's appeal. Once a market leader, Tesla is now losing ground to rivals in the EV space like BYD. Tesla's European sales have plunged 45% in January 2025, while the overall EV market surged 37%. Fierce competition from BYD and growing backlash over Elon Musk's politics is fueling this decline. Tesla's European market share shrank from 1.8% to 1.1%. Now, further pressuring Tesla and Musk is that one of Denmark's largest pension funds has officially blacklisted Tesla and sold off all its shares in the automaker, citing concerns over Elon Musk's leadership, labor rights violations, and problematic corporate governance. The fund's CEO says patience has run out. The Federal Reserve has maintained its benchmarked interest rate this week, still projecting 2 cuts this year, despite increased economic uncertainty. In its quarterly projections, the Fed now anticipates slower economic growth, higher unemployment reaching 4.4% by year-end, and inflation rising slightly to 2.7%. This is above the central bank's 2% target. Chair Jerome Powell noted that existing tariffs appear to be increasing import costs and potentially delaying the return to the Fed's inflation target. Economists suggest that the Fed faces competing pressures, tariffs potentially pushing inflation up, while deregulation could reduce costs. Now, for gold investors, this economic uncertainty continues to reinforce the metal's position as a preferred hedge in volatile markets. Aurion has signed a definitive agreement with KoBold Metals that allows KoBold to earn a 75% interest in a portion of Aurion's Risti property in the central Lapland Greenstone Belt in Finland. The deal structure is like this. KoBold commits to $12 million in exploration expenditures over 5 years, with a guaranteed $1 million within just 18 months. The key advantage here is that Aurion maintains 100% rights to any gold or silver discoveries while gaining a powerful partner for critical minerals exploration. Once KoBold meets its investment requirements, a 75 to 25 joint venture will be established for any critical minerals discoveries, similar to nearby successful mines in Finland. A headlining merger in the gold mining sector is facing significant headwinds. Equinox Gold's $1.8 billion bid for Calibre mining has run into sharp criticism from VanEck Associates. VanEck owned 8.69% of Calibre as of March 17th, making it the firm's top shareholder, and this is all according to data compiled by Bloomberg. It was also the second largest investor in Equinox as of December 31st data. Portfolio manager Imaru Casanova argues that the merger dilutes Calibre's potential. The company was poised to advance its Valentine project. Now, despite spanning operations across the Americas and sharing that characteristic, Casanova sees no strategic synergy. The deal reflects an industry trend of consolidation amid record gold prices. Yet, the history of mining mergers warns that not all combinations create value. Equinox's chairman, Ross Beatty, has himself previously cautioned against, quote, really stupid deals. Shareholder votes loom at this point, and 2/3 of approvals are required. In early March, San Lorenzo lit up trading screens when it dropped a round of assays from its flagship Salvador property in Chile. This week, they struck again. Drilling at the Cerro Blanco target revealed impressive gold intercepts, including 85.7 meters at 1.02 grams per ton in their second hole and 93.6 meters of gold mineralization in their third hole. CEO Al Krunche noted that these widely spaced holes are located 500 meters apart and that they've all hit substantial gold zones. San Lorenzo shares have responded with strong price gains and increased trading volumes following these developments. Sitka Gold has reported progress on a 30,000-meter drill campaign at its RC Gold project in Canada's Yukon territory. The company observed visible gold over 130 times in the drill core, with initial reviews suggesting strong gold mineralization extends at least 70 meters from previous high-performing drill sites. The new hole, dubbed Hole 75, was strategically designed to test the lateral and vertical extent of gold mineralization from the project's best previous drill hole. This latest drill campaign continues to build excitement around Sitka's Yukon exploration efforts. Citigroup is projecting copper prices to hit $10,000 per ton in the next 3 months. The global copper market remains tight as uncertainties surround potential U.S. import tariffs. Copper prices have been climbing higher following Trump's executive order to review copper imports. This national security investigation has sparked market movement. Major commodity traders like Glencore and Trafigura are rapidly shipping copper to the U.S. to get ahead of potential tariff announcements. The market is watching closely as the potential for new trade restrictions could significantly impact global copper pricing and supply chains. And there's your briefing for this week. Leave us a comment. We read every single one, I promise you, and tune back in next week. Thanks for watching.